Hello and welcome to another update video about Ethereum. Let's take a look at the Ethereum wave count here. Any updates? There is just a small update. I have added a possible micro count, but it is of course unreliable in a range like that. And there are other possibilities of handling this. Just be aware that today we've got CPI data, so hopefully it will move the needle a little bit because obviously we are in a very boring range. What we can talk about here certainly is that price moved up off the 15th of June lows in 5 waves. At the time reached our target range between 1960 and 1980, perfect, and is now coming back in this wave 2 that we've been waiting for after the first 5 waves up. It hit already our trend reversal area, our support area, which is quite large. I often say that the A wave usually reacts to the 38.2 Fibonacci retracement level. And it seems like it did that. So maybe this is now the B wave. Again, B wave could have topped here on Monday. This is not entirely clear to me. We established already yesterday that the B wave touched here I think it was the 50% Fib retracement. Let's just double check that, which would be okay for a B wave. 50% level at 1902. It also reacted to the structural resistance at 1895, which we have just done again. So the 50% retracement for a B wave is absolutely okay. Now, from that point of view, we've seen then a substantial reaction to the downside, which however was only in 3 waves. So I can currently make a case that this B wave could extend. As highlighted yesterday, we have to keep an open mind that the B wave can easily extend higher. This is certainly, let's say, high probability until we break below the 1844 level, those previous supports. I think until that's the case, we have a good case that the B wave could extend higher, but we won't know until it breaks above resistance. If it does extend higher, then our resistances or targets for the extended B wave, which would look like this, A, B, C, okay, so in larger B, we've got 1920, we've got 1944. That is anyway a strong resistance area with structural resistance points here. So I would pay attention to that should we go any higher. Now, there is a chance that B wave already topped, and that we're already coming down in the yellow wave count. That would be pretty much in line with Bitcoins. That would be pretty much in line with Bitcoins, that we have here a wave 1 down, a 2 up. The thing is, this is a very clear 3-wave move. Now you can count it as a leading diagonal, but this is not reliable. So I've just added this wave count here as an idea, but it would literally need to turn around now. Okay, any break above today's high, which was at 1895, so it tested again the dotted line that we had already added to the chart here, which was also the swing high of the 6th of July. If it doesn't turn around now and breaks above the intraday high at 1895, there's a really good chance, it's very likely, that it's going to extend the B wave higher. What else is there to mention? Yeah, and if it extends the B wave higher, we talked about targets and resistances. And if we head down now, the sell-off should be quite rapid, because we would then deal with the C wave. Not sure how much we see actually before CPI release. I mean, that's a few hours away, but it could be that we're not going to see much until then. And then the market, because it's just at a key pivot point, it's a key inflection point here. 1895, 1900, that's a key pivot point. So it's literally deciding between heading down from here in the C wave or breaking higher in a B. These are the 2 main scenarios I'm watching here. I mean, that we've already started a 3rd wave rally and wave 2 is finished. It doesn't look like it. This is not typical 3rd wave behavior. So what we're dealing with is most likely either the B wave top or just an extended correction, because this is corrective price action. I mean, it can always go higher, you know that, right? Anything could happen, but we're dealing with probabilities. We don't deal with the could, we deal with the should, and that is just much more reliable. Now, this could be in head and shoulders pattern. Yeah, I mean, you see that everywhere, people talk about it, but I'm not a fan of head and shoulders. It is certainly something we see, sure, but it doesn't give us any new insights in addition to Elliott Wave. We've got our Elliott Wave count, and sometimes you have these patterns and they are a little bit like very blunt tools, like a head and shoulders. Whereas we really need some surgical tools here, like Elliott Wave. So it's a bit more, yeah, it gives you all the risk management stuff and invalidation points and everything. Whereas this is what you see on every channel, people are head and shoulders. Yeah, it tells us the same thing, doesn't it? I mean, the C wave, now this is a corrective move to the upside. And yeah, head and shoulders are reversal patterns, so we could certainly see a bit of a reversal to the downside, a continuation basically, actually. But if you see this whole thing, it would be reversal. And bear in mind, I mean, if this is a C wave down, there's nothing stopping price to come down in the C wave. We talked about possible target, the golden ratio. Ethereum likes to get to the golden ratios. And also, just below that, we've got this ascending trend line. Let's zoom out a little bit. We already have 3 touch points, 4 touch points here. And this just goes through our support area. So it could very much be that we come down a little lower to 1715, 1720 to test that trend line just below the golden ratio, something that ETH did here already. Now also did get below the golden ratio to test that trend line, and here didn't get quite to the golden ratio, but still within our support area. Yeah, that's my update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.